Well, good morning, everyone. I would like to thank the invitation of the organizer. Today, I'm going to share with you our perspectives on the economy. As you know that there are a lot of major events, both home and abroad, and about the U.S. election. And also, in recent weeks, China has rolled out multiple economic stimulating policies, and people are paying attention to U.S., China from the domestic economy, and we are also paying attention to the macro stimulation policy to see their impact on the economy. First of all, I would like to talk about in a couple of quarters in the past some characteristics of China's economy. So first of all, there are separation or polarization of the economy. For example, the internal demand, external demand is higher than internal demand. This chart is breakdown of the GDP. This year, you know that import-export driver on GDP is higher than consumption. Domestic consumption is really weak, and however, export growth is still quite higher. Therefore, it's very obvious that more reliance on the external demand. Second separation. Second polarization is the polarization between the SOE and the private companies. On the whole, the investment growth is not very high. However, state-owned companies' investment is much higher than private companies. The cumulative private company investment has declined this year. However, state-owned company is more confident on the investment, and also the profitability between the SOE and the private companies. This chart we see that in the third quarter, this is about public company in Asia market. There is a separation between SOE and private company. SOE profitability is stable while there is decline on the private companies. Of course, there would be some difference in the investment confidence. SOE increased their capex while there is even negative growth on the capex on private companies. So this is the difference between SOE and the private companies. Second difference is the difference between the new and old economies. China emphasized about the high-quality development. There is an economic transition from the traditional infrastructure, real estate, and goes to the emerging industry. Traditional industry consumes raw materials, and for example, like cement. There is a very obvious decline on the cement production. Emerging economy, especially high-tech economy, has very rapid growth, like industry robot or the low-altitude economy or AI or green, the carbon reduction, these new areas. So this chart is about the economic information by the Statistics Bureau. We have three new economy, new industry, new business, new model. These three new increase the ratio in the GDP. You see that there is a transition to the new economy. At the same time, it's also closely related with today's topic, namely the green transition. There is the obvious separation between the new and old energies. In the new energy, there is a rapid growth in recent years, like wind power, the thermal power. The wind power and the solar power growth is much higher than fossil power. And also new energy vehicle. New energy vehicle proportion is getting higher. So far this year, new energy vehicle penetration is over 50%. For example, for every 100 vehicles sold, more than half of that is new energy vehicles. So there are some changes in the economic structure. Of course, we also see for the economy, we still feel the pressure. These pressures is related to the traditional economic decline, especially real estate. As you know that in the past, real estate is a very important part of China's economy. In the past couple of years, there is a decline on the real estate sales and investment, with a huge pressure on the traditional industry. There are some policies at a national level trying to stop the decline on the real estate, but found the effectiveness. And after policy being rolled out, there is an increase on the second-hand house sales, but not so obvious on the first-hand house. And also the new construction has been on a decline. And this is a leading indicator for the construction floor area. Next year, there will be further decline on the construction floor area. For the real estate industry, of course, we want to see the bottom up, but the bottom is not solid, and we may need more policy to give it a stimulation. For other traditional economy, the infrastructure, there are some other changes on the infrastructure projects. The overall speaking, the infrastructure project slows down. As you know that infrastructure is a supportive project for the real estate. If real estate slows down, then infrastructure slows down as well. Compared with the previous years, there is a decline on the infrastructure projects. I think that one is closely related to the stringent requirement on the quality. Only these higher quality projects and with a high return will be approved, and also related with the tightening of the fundraising from the local government. Of course, there are some transformation on the infrastructure. Traditionally, these are the traditional utilities like bridges, roads, railways, or the pipelines. But in recent years, we've seen some structural changes on the infrastructure. First of all, from last year to this year, like the water conservancy projects has been increased because we have issued some national bonds to support water conservancy projects. There are some kind of flooding in the North China. I think that there are more the water conservancy projects in North area. And also, this new infrastructure is also related with economic transition, like a 5G station or the charging piles. These are called new infrastructure projects. There is also increase on the new infrastructure projects, and there are some structural changes on the infrastructure as it slows down. Another is exports, and there are a lot of news about the U.S. election. Trump was elected by large margin. One is about the tariff. People are watching and see whether there will be high tariff. In 2018, U.S. imposed the high tariff on China. Of course, there is a decline on the China's exports and the proportion on export to U.S. But actually, the impact is not so large. There is the obvious decline on the China total exports. From the world perspective, China export has not declined. And actually, you see that China increased the export to other areas, for example, new markets and Belt and Road countries. And another logic is the industry chain relocation, industry transfer, and China has increased the investment in emerging markets, including Vietnam, Mexico, and this is also avoidance of the impacts of the tariff. And there is an impact, and of course, the impact is not so large. If Trump continues to increase the tariff to China, will this impact be larger? okay, and we believe that from the tariff perspective, that will be higher than last time. Well, will it be so high? And then, as he wished, we will still need to watch and see. Of course, they will measure the impacts. Of course, finally, the consumers will pay the price. It's the final consumer pay the bill. When they increase the product price, will the general public agree with that to pay the high price? Or even there is a high tariff, and we should have confidence over the past years, and because we have very full-fledged supply chain, and the products are very competitive, and actually we have a low price, a very competitive price. So Chinese products are very competitive compared with the U.S. products, and the cross-border e-commerce growth is very robust. For example, Tmall is the cross-border e-commerce platform. They export a large amount of small commodities from China to U.S., and this speed is really fast. Maybe U.S. will use the tariff as a bargain chip, but it may not necessarily have a big impact on China. So also another perspective, and we are looking forward that we need to have more stimulation on the consumption to offset other factors. In China's economy, there is a very strong external demand, while the internal demand is weak. And we can feel that keenly. For example, these consumption degradation, etc. On the expenditure, the people's spending willingness is going down. For example, more and more people are unwilling to spend money, and they prefer to put money in the bank, or they buy the wealth management products. And also some very obvious phenomena in the companies. The company profit goes down. The corporate deposit growth is weaker compared with the general public's deposit growth. So this is the difference between the general public's deposit and the corporate deposit growth. The general public's deposit growth is faster than companies. If the general public, they do not consume and they do not buy the house, then their deposit will not transfer to the company. Then it will be very weak. And N1, the speed is lower. N1 growth is negative. Historically speaking, N1 growth is related with real estate. If you want to buy a house, and then the general public's deposit will not transfer to the company, then the company will get less deposit. So you can understand in this way. From that, the consumption is weak. This is really impact on the economy. If we want to offset the impact of the tariff, then I believe that we need to stimulate domestic demand. As you see that the stock market goes up in recent days. For the stock investors, they also understand in this way. So we can see the change. If we want to offset, and of course we are looking forward to the fiscal policy. In the past 20 or 30 years, China's economy has completed a cycle after WTO accession. At very early days, that's driven by exports. After subprime mortgage crisis, then it's investment driven. After 2014, 2015, then it's consumption driven. The exports, investment, and consumption, all these cycles have almost completed. Then after COVID-19, the economy is still sluggish. I think that now we rely more on the government stimulation. What kind of the policy, and actually is relying on the different leverage. Export is our foreigners' leverage, investment is a company's leverage, consumption is general public's leverage. Finally, when we cannot see the effectiveness anymore, of course, we rely on the last result, namely government stimulation leverage. For Chinese government leverage rate, if you look at the world, the leverage of the government is not very high. There are much room for improve. But some people say that maybe the implicit debt is not added. Even we add implicit debt is still will not exceed 100. We still have much room to further increase the stimulus package, especially for the central government. They have the further room for maneuver. We are looking forward to the National Congress. Maybe they will approve the Treasury amount. So we are looking forward to this amount of the national treasury and what's the intensity for the stimulus. For the fiscal, the intensity will go up, and how much it will drive economy, that depends on whether this incremental amount will have a new record. And if we can set up a record, we will see the effectiveness. So how come I say what kind of record was set after stimulation? If it's a V-shaped rebound, then it really will have an incremental increase. It rely on the debt leverage and to rebound profit to drive the economy out of difficulty. We want to see whether this is M1 will improve. At the same time, we also need the current policy, currency policy, and the currency policy should go hand in hand with fiscal policy. Currently, it's not so relaxed. In the future, if we are looking forward to more issuance of treasury bonds and local bonds, like the issuance of bonds in 1915, then we also need to relax the currency policy, monetary policy, go hand in hand with fiscal policy. Now this year, now you see that the U.S. currency restraint is relaxed. U.S. cut rate, then also we can cut rate. In recent days, China's market, there is a very bull market for the debts and the stock. Now, because of the relax of the monetary policy, there is a very good the interest rate decline, a very good bull market next year, and there will still be pressure, but we also see some hedging or offsetting, give you more confidence. That's all. Thank you very much.
就先到这，谢谢。